right, everybody, welcome back to the channel. So we finished the day off and the week off yesterday pretty weak on the S&P 500. We'll talk about that. I'll give you your points to look for next week. We have CPI coming up Wednesday, which is going to put a lot more volatility in the marketplace. As of right now, Bitcoin still looks structured bullish on the long term. It still looks fantastic. You're still trading above the early opening range, but you do have a bearish engulfing candle here. Now, you're not closed on this week, and it's not like a great sell signal because generally when you have a bearish engulfing, you want to typically see the close be under the previous week's low, as that's a more strong weekly sell signal, if you will. So I'm not really seeing that just yet, but it is getting more and more concerning because the risk markets just continue to melt and melt and melt. But let's remember, we're just now really starting to get this year kicked off, right? Because the last week of December was a holiday shortened trading week, and the first week in January was a holiday shortened trading week. Last week was the first real full week, and then they closed the markets for Jimmy Carter funeral. So that wasn't even a full week of trade there. So this week coming will be the first full week of the year. So we could see that volatility slow down and start to turn around. The VIX is still where I want it to be, but it is starting to look a little bit more and more concerning. We go to the daily time frame. We did get a push higher into that resistance level of $20.22, where I will be probably looking for bigger moves lower if we start closing dailies above this. I honestly thought we were done with this area here and that we would see the VIX ultimately roll over. And I'm not really seeing anything concerning in VIX futures right now. The VIX futures, we're not seeing like a massive backwardation or anything like that. I don't like that it keeps inching into this area and it keeps getting higher and higher, because this could cause like a blow off or a blowout, if you will, as this appears to be the area where vol sellers are coming in there and selling volatility. But Friday's close did not look very good for the vol sellers, right? So now you could start seeing a lot of vol buyers win this little push and pull we've been seeing for the last few weeks on the VIX here. That will ultimately affect what we see with Bitcoin and the risk markets. But let's talk about Bitcoin. Bitcoin had a nice week at the yearly opening range where it expanded and went into the weekend nice and strong and closed above. And then Monday we opened with a very big rip your face off rally. Bitcoin was up like 3-4% on this day. And then Tuesday came, liquidated the previous week's high, or it liquidated Monday's high. Sorry, it did not. This would have been the weekly high right here. So it essentially just liquidated Monday's high and then reversed. If you would have been able to short that, knowing that the top or the bottom of the weekly range is a lot of the time set on Tuesday, then you would have been able to position yourself nicely for a short there. We did not. We missed that. We were actually looking for bullish continuation because we got this nice daily close above that November swing high. But now we're back under that November swing high and back to last week's analysis. If you got back under it, it would look like a head and shoulders formation on the monthly time frame. Going back to the monthly here, you still have that head and shoulders formation. And the longer this sticks around, the worse it starts to be, right? There's your left shoulder, there's your head, there's your right shoulder. So even though we haven't seen that monthly expansion lower yet, we're still real early into the month, and there is a potential that we set the month high on Tuesday as well as the week high. What I'll probably do next week is wait till Wednesday to see where we're trading. If we're trading anywhere above this region in here, it's going to look like a short entry more than a long entry. All right. Because Friday, even though we closed up on the day with Bitcoin, we closed down on the day on the risk markets. We closed down on the near-term bonds, and the risk markets were extremely bearish. But let's go ahead and finish up with Bitcoin. As of right now, long-term, Bitcoin still looks really, really good. But how many down candles are we going to set through before we decide to switch up our near-term analysis? So if you want to be a buyer at the yearly opening range, you can be. But you have to take in the caveat that the VIX is looking a little bit worse for wears here. So what we want to see going in the beginning of next week is we want to see that rejection on the VIX. If we get a nice rejection, then we can look to position ourselves long again. But if we expand in the upward direction on the VIX, that means we're going to be looking for near-term shorts on Bitcoin. And remember, we're still stretched out very far away from that weekly 21. That weekly 21 sets at about 83,291. All right. So we could see this get down and test that 21. We tested the 21 yesterday on the weekly time frame on the S&P 500. So on the near term, Bitcoin looks okay. You haven't even lost the 60 on the weekly, but here on the daily, this looks more like a sell setup than a buy setup. I posted that this was a buying opportunity when we traded down into this, and it was, right? Here on this day, if you were able to capture that buying opportunity when I posted it, that would have been a nice long trade. Let me go into my profile here. We'll show you exactly what I'm talking about. Bitcoin retesting the yearly open in itself is not that bearish. However, losing at that and the 40 on the RSI is bearish, right? But if you are scared to buy here, you are over leveraged or trading with too much money. You should never be afraid to take a buy signal, no matter what. If you're over leveraged, you're trying to make too much money on your winning positions, and that's going to cause you to be a losing trader overall. You need to have a systematic approach when it comes to these markets. And when you get a buy signal, you need to look to buy it. You're coming into daily support here, right? Now we know we got down to this wick low here. So we did ultimately end up pushing into the 40 here. And that was a good buying opportunity. You did liquidate that wick low right there, and that was an instant buy signal. And you did get upside continuation. So you should have taken profits. We never look for continuation or a breakout above a range. If we get it, we're already positioned at the lows, but we don't take the position at the lows expecting that. This would have been your near-term profit target at 95,029. And had you taken your profits there, you would be situated perfect now, especially for any upside continuation. Because this range is still the strong range. It is still holding. 95,051 is still resistance. You haven't closed above it. This is not a resistance candle, right? But your near-term range is still inside of this candle. You only traded outside of this candle for a brief moment yesterday, and then you got back inside the range. So this does look kind of okay, but if you ask me, it looks more like just a near-term correction on a weekly expansion lower. So be very careful. Any pullbacks into the 50 on the RSI moving forward here, Monday, Tuesday, or Wednesday, if that occurs, or even a little bit above it, people will attack that to the sell side. So keep that in mind moving forward. Though we have not broken the support and we have not seen a massive expansion lower yet, it is on the horizon because we keep making lower highs. This is a higher high, but then we immediately made a lower low. So now people are going to be looking for a lower high moving forward, and then they're going to be expecting a breakdown. I'm not expecting a breakdown, but I myself will be looking to watch the 50 on the RSI moving forward next week, and that is where I will be looking to take that sniper entry. All right, if I can couple that with a long-term level or a weekly close or something like that, it'll be even better. So we'll see. Do we retest this weekly candle here next week into Wednesday, get the CPI news, trade above this briefly, and then drop? If that happens, that will be a short setup right now for next week. But overall, on the long term, I am still bullish on Bitcoin. Moving over here to the S&P 500, here you are. You've lost your bullish momentum on the weekly time frame. You liquidated these swing lows without any bullish advance from that liquidation. The reason you did not see any bullish advances from the liquidation is simple. It is because Friday was so weak across the board. This is the advanced decline line on the S&P 100. It is the 100 biggest stocks inside the S&P 500. You can see that it closed very weak. So is it possible that we have a gap down on Monday? It is. It is. You'll probably see a nice little move to the upside before the big move lower. But if we are going to continue lower, then I would be watching the yearly opening range or this swing high, which is at 59.46. That is the top edge of the weekly expected move on the options market. Here is your 21 exponential. You closed right at it. Remember, I like to buy when we get a retest of it and then a rejection, like an immediate bullish reaction. We're not getting that now. So next week, it looks like we are looking to potentially push lower into this area. So just take that with a little bit of caution going into next week. You could potentially see a bounce coming into the 50 on the weekly. But if we go back to the daily, you can see we are losing the near-term buy objective. But when you've attempted to break down 2 times and made lower highs both times, it suggests that the sellers are loading up, right? The sellers are loading up. So I don't know if we were weak enough Friday to see a gap down, but I think the majority of your range is going to be emphasized with what news we get on Wednesday. As far as the ratios go, we're not really seeing anything too concerning there just yet. All right, so here we got the growth versus value. We're not seeing a full-on gap down, continuation lower, gap down, continuation lower, something comparative to what we've seen over here. We're not seeing that yet, so this is not too concerning. Everything still looks like a little bit of a near-term correction. However, on the energy sector, which could potentially be looked at as potential inflation concerns, I don't think we're seeing that in oil. I don't think we're seeing the bounce or the breakout in oil because of inflation concerns. I think we're seeing the breakout in oil because it has been in a 2-year range and the volatility has been compressing to the point of breakout was inevitable. That's why I had you guys position yourselves long in the XLE. It was clear as day. That trade's already done and over with. So we'll see if oil finds any resistance in the weeks to come. If it continues to do this, it will put out inflationary fears based on oil going higher and gold rising with the strong dollar. All right, moving forward, S&P versus the XLP. This looks fantastic. We're not seeing everybody run out of the SPY into the defensive sector yet. And we're still not seeing, this is because of the XLE. Here, let's go look at the dollar versus the SPY. You can see that we're still in this, pretty long-term range here. This couple-month range we've seen. Anything above like this swing high is going to start getting concerning there. But we're at that spot on the dollar where we could potentially be seeing a near-term reversal signal. All right, we're not able to break out. Even though we're breaking out on price, the momentum oscillator is not reflecting that. So this could just be a liquidity run that's going to take multiple days to play out. However, it doesn't really look like that on the weekly. So I apologize. I understand that you're probably not getting a whole lot as far as directionally biased. I would say going into next week, you got to be more concerned for that near-term downside bias. But as of right now, like for the dollar, we have an engulfing almost, a bullish engulfing with a close on the highs. This doesn't really suggest to me that we're looking for a correction just yet. This is also on the 2-week time frame here. All right. So we liquidated the previous 2-week candles high, and not only did we not get that reversal, we closed on the highs. So if we look at that on the daily, here is that swing high. We initially got that correction, traded down to the weekly low, and immediately went higher. So could this just be a liquidity run? Yeah, it could, but it's like how many times are we going to try to short the dollar based on a liquidity run before we're going to say, okay, maybe we're wrong and this just wants to continue higher? We thought it was done last week, all right, and then we got this move. So this suggests more near-term strength. If you're trading above the yearly open on the dollar, you have to give the respect to the upside, especially since we just broke out. Now, if we get a couple days of not doing anything and then a big bearish expansion on Wednesday based on CPI data, then I could say your near-term up move on the dollar is probably finished for a little while. So be very careful looking for near-term reversals on the dollar by, potentially trying to get long euro. Now on the euro, you did get a liquidation here and you did not close under it, but still this is a fresh downside breakout and parity is just below us. We look at this on a monthly time frame, there really isn't anything in here to look for as far as liquidations are concerned. So this to me looks more like near-term weakness than it does a liquidation break for right now. The 2-year bond still looks pretty bad. The 30-year, 2-year, 10-year, 5-year, all of it. It doesn't look great. Here is your 2-year yield, a fresh liquidation of a swing high. Once again, if this is just going to be a liquidation coming off from the news that we got on Friday, then I want to see that start to play out next week. If we get upside continuation with more upside continuation, my stance on the near term is not that this is a liquidation break. Now, the Fed thinks that this is going to potentially roll back over at some point, which means the near-term bullish positioning on the bonds is still out there as far as what the Fed thinks is going to happen. But if we get continuation lower on this 2-year bond, that's going to be more in line with the market is telling the Fed that they may have to change some things on their monetary policy. That could be why we're seeing the marketplace as a whole sell off. On the 5-year, the bond does not look like a liquidation break. I'm sorry, this looks like downside continuation. I did not want to see this happen on Friday, especially when the news was good. The news is good for the economy. It's not good for more rate cuts from the Fed because the economy's doing just fine. And then if we look at the 30-year, fresh breakout to the upside here, you got above 5% on the 30-year briefly. Now you are at an area where you don't spend a whole lot of time in history up at these levels. And that's generally because once these yields get this attractive, so I am not astute in bond knowledge, all right? I rarely trade the bonds. I'm only trying to take a bullish position on the 2-year right now because of the last Fed meeting. And the Fed is generally right, generally. Now, it's hard to time that trade because of the near-term volatility, but they generally are right. Even though I feel as if though this is going to top out soon, I still have to give respect to the upside on the yield, which in turn means the bond sellers are still in control of the market. But I could absolutely be wrong, and the market right now is telling me that I am wrong. So hopefully you get some value out of this. Hopefully you're able to take this data and apply it in your trading next week. Thank you so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.